Hi, welcome to Taxes and Bubbly, a channel that discusses topical tax issues in a manner that is easy to understand and digest, just like Prosecco during a summer. Summer 2019 is behind us now, it's October, and what accounting firms noticed when we returned from the Labor Day holiday is that CRA has been busy sending out audit letters to many small Canadian corporations during the summer. The expense item that is specifically being audited heavily right now is auto expenses. So let me give you a little bit of history about auto expense audit. About 2 or 3 years ago, many accounting firms also noticed that a few corporations, more than normal, were receiving audit letters to audit auto expense, and the other one was consulting fee or management fee. Okay. So I guess that expedition turned out to be financially successful for the CRA because this year, many more corporations are being selected for the auto expense audit. Okay. Number one is that only corporations that have more than $10,000 in auto expenses are being selected. So if your auto expense is quite low, the chance of selection is not that. You're not being selected. Okay. See, the thing with auto expense is actually it's a bit of an easy area to audit for the CRA. In the Income Tax Act, in order for an auto expense to be deductible, there has to be some kind of driving log that tracks the date of the travel, the to and from, and the purpose of the trip in some kind of log. Okay. And you business owners know that on a day-to-day basis, there are a lot more urgent matters to attend to, and unfortunately, updating the travel log is not one of those urgent matters. So, and this is why I think CRA is auditing auto expense, because on their last expedition, it was probably a fairly successful audit expedition. So what I'm thinking about is, let's say if a corporation is a restaurant, right? And we know that restaurant owners run to the grocery store on a fairly regular basis to pick up groceries, probably visit the accountant, meet the vendors. So if there's not an auto log available, it's probably quite easy for the CRA to deny that deduction for the restaurant. But on the other hand, let's say if we have a personal real estate corporation, we all know that realtors drive their clients around all day long, and so the driving mileage is quite high, even if the audit log is not complete. So I think the experience that the taxpayer will have with the auditor is really going to be dependent on how lenient the auditor will interpret the Tax Act and the experience of the auditor itself. Okay. But my bigger message is that I believe audits are going to be on the rise in the near future. So it's all the more important now for taxpayers to work closely with their tax advisor. Okay. In this day of digital documentation, having proper documentation available is really easy. You just need to have it on the cloud somewhere. But you need to devote human resource to having these documentation available 3 years later when CRA audits you. And number two is that don't believe all the tax myth stories that are discussed at cocktail parties, because a lot of times they're nothing more than myth, and if you follow them, you may get yourself into trouble. So I'm going to end this vlog here. Thank you for watching, and if you enjoyed this content, give me a thumbs up and please subscribe to my channel. Good night.